Welcome to our simplified guide on understanding capital loss tax. In this video, we'll explore the basics of capital losses, how they affect your taxes, and common scenarios you might encounter. In this video, we'll cover the basics of capital losses, common scenarios and their tax implications, some important considerations, and the importance of consulting a professional. Let's start with the basics. A capital loss occurs when you sell an investment, such as stocks or bonds, for less than you originally paid. This loss can offset your capital gains. The main rule is that capital losses are deducted from capital gains. If your losses exceed your gains, you may be able to deduct up to $3,000 or $1,500 if filing separately from your ordinary income annually. Any remaining loss can be carried forward to reduce your taxes in future years. Now let's look at some scenarios. In scenario 1, if you have a $3,000 loss and a $5,000 gain, only the net gain of $2,000 is taxed. In scenario 2, with a $5,000 loss and a $3,000 gain, you can deduct $2,000 against your ordinary income. Finally, in scenario 3, if married filing jointly and you have a $10,000 gain individually and a $15,000 loss for your spouse, the net loss is $5,000. You can deduct $3,000, carrying forward the remaining $2,000 to future years. Let's test your understanding with a quick question. What is the maximum annual deduction allowed from ordinary income if losses exceed gains? Your options are $1,500, $3,000, $5,000, or $10,000. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is $3,000. This is the maximum deduction allowed annually from ordinary income when losses exceed gains. There are a few important considerations to keep in mind. Firstly, the long-term versus short-term holding periods affect tax rates, with over 1 year being long-term and under 1 year being short-term. Secondly, meticulous record-keeping of all your investment transactions is crucial for accurate calculations of gains and losses. Finally, consulting a tax professional is advisable, as tax laws can be complex, and they can provide personalized advice for your situation. Here's a brief summary. Capital losses are used to offset capital gains. The maximum deduction you can take from your ordinary income is $3,000 annually. Tax laws can vary significantly, making it beneficial to consult with a professional. Thank you for watching. We hope you enjoyed the video. Don't forget to like, share, and subscribe for more content. Let us know your thoughts in the comments.